to share here. Okay, folks. So look, I wanted to kind of present to y'all a rationale for why we could be at or already have experienced a cycle all-time low. Now, I just want to preface this by saying that, I'm not completely fully convinced myself. There are some reasons to think that this is a short-term temporary relief rally where we could put in some new cycle all-time lows. Typically, as Richard likes to say a lot, Bitcoin has typically had an 84-85% drawdown from its cycle all-time high. That plus some kind of the macro bearish environment. There are reasons to think that this is a short-term bull trap. New lows are coming in. But with that being said, I do want to present a case for why it is likely and why there are signs pointing towards a cycle all-time low being in, or at least we're being very close to it. So number one, I want to start off by saying that just timing analysis, looking at the first cycle here, this is 2013. From the all-time high to the all-time low took 426 days, roughly 365 days during the 2018 bear market. And this time around, we have been going down, I believe, for roughly 420 days-ish. So timing analysis-wise, we have been drawing down from similar amount of time that we have in the past. So that's one sign pointing towards us, already perhaps having a cycle bottom in. So guys, look, there are a couple more interesting things here. So we're looking at the monthly chart here. In the background, if you guys can see this all right, this white line here, this is the monthly RSI. We are actually the most oversold we have been in Bitcoin's history. So that is actually quite compelling. So we're the most oversold, and now we're starting to see strength on the RSI. Now we're looking at the stochastic RSI here with this blue kind of orange line here. It's much more volatile than the regular RSI. Looking here at the monthly as well, we can see that every time we've had a bullish crossover and seeing positive curvature after having spent time in the overbought region, that has pointed to a cycle all-time low. So if we look at kind of this screen here, this blue little tick, can you see that, man? Or maybe I should zoom in a bit more here. So this blue tick coincides with a bullish crossover right here, and this was at or pretty goddamn close to the first cycle all-time low. Now looking at 2018 as well. Positive curvature, bullish crossover after spending time in the sold territory. Look at that. All-time low or goddamn near. Now, this time around as well, we had a bullish crossover with positive curvature after spending time in the oversold region, and it was at the monthly this cycle all-time low. Whether that will be the definitive all-time low, it's an open question, but it is uncanny that every time this has happened before, it has been the cycle all-time low, and that is what we're seeing here. Now looking at the monthly MACD, this is a momentum indicator. Historically speaking, let's go back to 2013 over here. Let's exaggerate this a bit more. We're looking at the histogram here. All right. Whenever the histogram started to see positive curvature and started to show a shift in momentum from the oversold direction to the overbought direction. So whenever we saw this color here, that essentially pointed towards where a cycle all-time low, or at least close to. So this histogram tick coincides with this monthly candle. That's 2013. And then during the 2019 cycle as well, if we look at our histogram, you see how we start to tick up in the bullish momentum direction. That this monthly candle. And if we look at this cycle as well, once we started ticking in a bullish direction, they coincided with this monthly candle as well. So those are a couple momentum indicators clearly showing that we are extremely oversold, and we're seeing a clear macro shift to a bullish momentum in a similar fashion to which we've seen this happen before. It marked kind of a cycle bottom.
Wow. And what is the case for, I guess the opposite happening where, it is a bull trap, and 2023 is just the year of sideways bull trap, prep for the actual next bull cycle? Like, well,
Sure.
how would you make the case both ways, I guess?
So bull trap can mean a lot of things. Bull trap can simply mean, a 3% drawdown, a 5% drawdown, a 20% drawdown. So it could be the case that this is a bull trap and that also the cycle low is in. It could be that we simply correct back down to 20,000, 18,000, 17,000 and a half, even 16,500. And if, as long as we maintain the low at around 15,500, we correct, quite a bit and still have kind of the macro all-time low still be in. Now, I wanted to kind of zoom in to kind of the short term here and show you guys why I do think there is a case for this being a bull trap, and for why I think we're very likely going to have a correction here in the short term. Now, I had a couple more things drawn here. They just disappeared, but that's okay. I'll just kind of describe to you guys what we're seeing here. So right now we're looking at a 4-hour chart of Bitcoin. And what we're seeing here is we're seeing higher highs in price action. See how each wick here is higher than the kind of previous one, paired with lower highs in RSI. This is classic bearish divergence. This is a sign that kind of the upward momentum is running out of strength. And if we kind of zoom back out here to the daily and look at the RSI as well, the last time we were this overbought on the daily RSI with Bitcoin coincides exactly with the previous 2 cycle all-time highs. So you see how or local highs. See how high this RSI is here? Coincided with a local high here. This RSI peak was pretty goddamn close to the cycle all-time high. And so this is just showing that we are in extreme overbought territories. We're quite overextended to the upper side here. Now, with that being said, a lot of people fall into a very dangerous trap, which is when something is overextended, either to the upside or to the downside. It is extremely important to not try and what's the proper terminology here? Course correct too soon, because ultimately the trend is your friend. The most important thing is price action. And we are currently still in an uptrend. We are still in the short term, putting in higher highs and higher lows. So even though there are some reasons to think that this could be a bull trap, that we are overextended in the short term, until we see a clear sign of trend reversal, all we're seeing is signs. And so one thing I would look out for is a lower low by candle basis. So if we get a 4-hour candle or a couple opening and closing on a new low, then I would take that as kind of a real tangible sign that we are perhaps overextended and beginning a reversal in our chart here. Now, I wanted to kind of bring up the stochastic RSI as well and look at kind of the 3-day here. If we look at the 3-day, every time we're in this overbought territory and had a bearish crossover, it coincided with a local top. So see how we're overbought here, bearish crossover on 3-day, and it was the local top. So if we kind of look back at our most recent history, every time we've done this, they were local tops. So again, just saying there's reasons to think that we're overextended in the short term, but I would want to see a bit of confirmation in price action to kind of confirm that the downtrend is indeed coming. But to kind of perhaps attempt and answer your question, I do think there is most definitely a case that this is a bull trap, especially if we get 4-hour candle closing, opening and closing on a new low, if that makes sense.
So it could be a bull trap, but that could
we just want to see confirmation of it, basically. Sorry?
Yeah, but I think I'm trying to synthesize too about your explanation of, because when people hear bull trap, they think, oh, it's just a fake out event that we're still going to go lower, all this stuff, but that doesn't necessarily mean that. It could mean, hey, this doesn't mean we're going to just go hockey stick and back up again, but it could mean that maybe we make higher lows or something, or we in that area. So yeah, if you could just maybe explain the different kinds of bull traps real quick, that might be helpful.
Sure. So a bull trap kind of fundamentally just kind of describes a local or cycle high where price pumps, we think price is going to keep going, but really it's just a trap to get bulls long and then liquidate them. So that's essentially what it is. And you look for kind of a bull trap whenever we're kind of overextended here, and we are overextended. Like, for example, when we look at the RSI on the daily, we're pretty goddamn close to where we were with previous local highs and the all-time high as well. Same with the stochastic on a 3-day. So we're essentially overextended, and looking for confirmation, you want to see us closing, getting higher time frame candles, opening, closing on a new low. Once we get that, we could get a bull trap, which essentially just means that the local highs are in that we could go on to see either a large correction or simply a period of consolidation. Bull trap can mean a lot of things. We could see a quick crash, we could see a long drawn out correction, or we could just see a small crash and then a period of consolidation. It could really mean a lot of things.
And so what do you think we are in the psychological market chart? Do you think it's denial? Do you think it's anger? Like, where do you feel like we are for 2023 as with the current data you have?
Well, I don't know about you, but I was feeling depressed for a good little bit there.
That's the thing. If we are in denial, that's because I kind of look out for that. Everyone's saying,
I felt denial. I don't know about you. I felt denial.
I felt it too. I feel like, everyone's saying, I don't want to hear it. That's literally my response to seeing any kind of bullish news, any kind of, stuff like that. I was like, I don't want to hear it. I don't want to focus on that. I don't want to get my hopes up, that sort of thing. So is that the definition of denial? It sounds pretty close.
Absolutely. Yeah. Denial is just saying, hey, this is a short-term relief rally. This is a bull trap. We're going right back down. And look, people, we got to be careful of this and really look for tangible markers to guide our thinking, because human beings, they make their decisions based off emotions. When we were in the bull market, we many people were saying Hex is going to $1, Hex is going to $1.50. I probably said it at some point. Hex is going to $5, Hex is going to $10. You really got to be wary of following, your feelings and intuitions, and look out for markers. There were clear markers that Hex was probably close to a cycle all-time high when it did top out. Now that we've corrected quite a bit, but differently than we have in the past, and therefore it's still an open question as to whether or not the cycle all-time low is in. Well, because there's we can go either way. I place my faith in tangible indicators. Whether it's some kind of sentiment marker, whether it's a macro cycle event, maybe Kraken goes bankrupt or something, or maybe looking at macro indicators that have historically been somewhat accurate. Trust the indicators when you yourself and your feelings are unreliable. So that's kind of what I default to. And even though there are a couple of reasons to think that this is a bull trap, and that could mean a massive correction, but that could also mean a slight correction and then just a lot of consolidation. We don't know what that means.
Speaking of macro indicators too, just on that, there's a question for Connor. Is there any big negative macro events still to come? How do you factor those in? And I don't know if this is something that TA can help us with, or if it's more on the fundamental side, or if, with macro indicators, maybe there's some overlap there or some kind of relationship. But 2023, a lot of stuff going on, not a lot of good financial news going on the fundamental side. How does that factor into this kind of work?
So look, these indicators are fundamentally all lagging indicators. The question kind of refers to how do you incorporate negative macro events still to come. Yeah, so for that, you got to consider the fundamentals. And one of the largest kind of driving forces fundamentally right now is the U.S. Fed and the interest rates, because that essentially dictates the cost of money, which is essentially kind of controls the amount of money flow pumping the markets. And, a lot of people go on to say that crypto is essentially, as it is today and as it has been for a little while, it's essentially a leveraged position on the S&P 500. There have been periods where that's not the case, and there's good arguments to say that one day that won't be the case. These are fundamentally separate markets, although sentiment does connect them. So there will be some degree of correlation forever due to sentiment. So yeah, we got to consider, I think, what's currently the largest driving force, which has been the Fed and their interest rate hikes. If there's recently been good news that that inflation was slowing down, which I think was part of why we saw kind of this pump too. And I haven't checked the S&P, but I bet if we were, we'd probably see it doing something similar. So yeah, no, that's my answer. We got to look out for the Fed and the interest rate hikes. Yeah, if we look at the S&P, it's up to. If we see the Fed start to slow the rate at which they're hiking rates, or even just keep it steady, the market will interpret that as a bullish event, and the market will look for any reason to have a sentiment change and go bullish once again. And so I think we've started to see a bit of that with, I think, the recent news that inflation in the U.S. Is going down. And so if we see more continuation of either slowing the rate hikes or maintaining them or even dropping them, that I think will, over the mid to long term, continue the relief rally.
Well, so everyone's expecting 2024 to be a big year. Do you think it could start in 2023 and then 2024 is just like the mega flash supernova? Or do you, like, I guess, what would you say to people who are, maybe in the denial phase, like we were talking about, and are just thinking, hey, I'm just sitting 2023 out. I just think 2024 is going to be the year. Let me just get through this pain. I've already dealt with it. Don't give me any hopium. Like, how do you, how would you talk to people who are already convinced that 2024, they just need to wait?
I would agree with them, because look, ultimately, again, people think crypto is risky, and for a lot of reasons it is. It's highly volatile. We get rug pulls. There's a lot of debate over what's a fundamentally sound set of fundamentals for what can lead to have longevity in a cryptocurrency project or product. There's a great deal of unknown and a great deal of debate in the space. But what is a consistently reliable thing to look at is Bitcoin and the halvings. If we look at every halving in the past, which I mark them with this arrow followed by kind of that white circle here, we can see that every time there's been a halving, it immediately leads, not immediately, a month or two or three later, to a price shock followed by the inevitable bull market. And so, judging by the time we have the next Bitcoin halving, which is sometime in March 2024, I mean, yeah, given March 2024, whatever local bottoms and corrections we have, those are very likely to just be extremely good accumulation opportunities before we start to see parabolic structure come late 2024 and early 2025. So look, guys, essentially, whether the cycle bottom is in now or 3 months from now, the way I'm viewing 2023 is literally just an opportunity for whenever you can get any kind of correction to start DCAing into whatever you like. Because historically speaking, come 2024 and the Bitcoin halving, that's when things really start to take off. And that's when we have consistent upside. Because, yeah, we can have short-term relief rallies in a bear market. But the thing about the bear market is that it's old. And the thing about you investing before the next Bitcoin halving is that there's a larger degree of uncertainty. But that degree of uncertainty can be mitigated by just extending your time horizon. So as long as you extend your time horizon to roughly a year after the latest Bitcoin halving, you can really be forgiven to accumulating inaccurately. I hope that answers your question.
Yeah, no, yeah, certainly. Crypto Truth, and we need the coins to be sold. This got to go away, right? I believe that's in the GBTC deal, I believe.
Yeah. What's it? It's the Bitcoin grayscale discount. The discount has been going away last time I checked, which is, yeah, look at this. Which again is another kind of positive thing to look out for. We are seeing the discount start to disappear. And so even though it's still 36% down, just the simple shift in the trend is enough to result in real world price action difference. And that might be enough to help put in a cycle time low. And especially if you consider some of the macro indicators we touched on before. Again, there are reasons I think that we're either at or close to a cycle bottom. And even if you don't time it perfectly, really just got to wait until March 2024, where the uptrends become sustainable.
Wow.
This market is not that complicated, man. It's really not. Like roughly a year after the latest cycle all-time high accumulate, roughly a year after the latest Bitcoin halving sell. If you follow that roughly, you're going to do well in this market.